What's going on, everybody? I wanted to share with you a little bit about what we're seeing or what takes place in interest rates and how just 1% and where we were year over year compared to where we are today and the projections of what we're seeing in the future. More importantly, I just did an article here explaining the importance of how interest rates really affect home monthly payments. So let me take a look over here. I'm going to share my screen. I'm going to share with you a little bit about the blog I did. And so what I wanted to share with you, and you could take a look at this article as well here, but basically the impact that interest rates have on your monthly payment are huge. And the reason is well, a couple of varieties that come into play is one is your credit score. The other one is the 10-year yield and what that number is and how it affects prime on how banks look at this. So the lower the credit score, the higher up your interest rates are going to be. The interest rates have been hovering right around low sixes now. A year ago, we were probably low sevens, not probably, we're in the low sevens. But these things make a huge difference where it really narrows the gap of our buyer audience and those that are able to get a loan. The lower the credit score, the more money that you also have to put down also affects the buyers and what they're trying to afford, and hence the affordability. And so that's really been our biggest challenge is the affordability. See, there are buy downs that you can get. You can do a 3-2-1 buy down, a 2-1 buy down, a 1-year buy down, for crying out loud. You could do a fixed rate and buy the rate down. So yes, the rate is important, but at the same token, it's not the biggest indicator. It's the affordability. But for the article that you see here, we are talking about the interest rate and how the interest rate really will affect your monthly payment. Now, your taxes and insurance, those have been going up as well. And so what we call PITI is your principal, interest, taxes, and insurance are all lumped in. And that's how we get your monthly payment. And so by increasing or decreasing by 1%, it makes a huge impact. Let me show you something over here on basically how much it makes a difference on this one here. They did $950,000 that they have here. And so with the 950 from going from a 4.625, boy, we would love that. Hell, we would love the 5.625. But going from just that percentage there, you could see the monthly payment from $3,900 to $4,300 and change. Roughly about a $400 difference. Year over year, you could see what that difference looks like at $52,000 compared to $46,000, and don't even get me started on hold the 30-year, what it would look like. So over the course of time, this makes a huge impact on your monthly payment. You can read more in this article, but want to share with you, at least to give you an idea of how just 1% can make an impact. But at the same token, please note there are ways to get your interest rate down, not so much on the affordability side, but that's where the negotiation comes in, asking for a seller to pay for some closing costs as well as negotiating price. Because right now we're seeing about 34% in February of 2026. We're seeing a large number of price decreases taking place. So if you want more information, click the link below. If I can help you in any way, walk you through some options with the interest rates and how we can make them work for you and get sellers to pay for them, let me know. I'm here to help. Till then, everybody, have a wonderful, wonderful day. See you soon.